Check it out, guys. So this week coming up is going to be absolutely massive for the stock market. We have the start of earnings season, which is going to be fun, guys. We have some banks to talk about today, which are going to report earnings later in the week. And earlier, well, I guess kind of in the middle of the week, we have the CPI data coming out. We have a lot to break down in this video, guys. If y'all find value, hit that like button. Make sure to subscribe. And don't forget to get up to 15 free stocks from Mumu using that link down below. We'll talk more about that later. Details on that later. And now let's dive into the video, starting off here with the overall markets like we always do on Sundays, guys, and let's just dive into it. So you all probably know the markets were closed on Friday for Good Friday, and today is Easter. I hope you guys had a great Easter. I'm actually Greek, so I celebrate, well, my fiance is not Greek, so we celebrate her Easter, and then I have the Greek Easter. So every year I'm celebrating 2 Easters. It's always fun. It's a great time. So I hope you guys had a great Easter if you celebrate today. I sure did, guys. I sure did. So yeah, let's just dive right into it, starting off here with the S&P 500, looking at SPY, which you guys know on Thursday, everything ended up going up. We had the S&P 500 go up 0.4%. We had the NASDAQ up 0.7%. The Dow, well, I guess the Dow pretty much broke even, but still, it did go up about 2-3 points, which technically is a green day for the Dow, as the VIX went down about 3.5% on Thursday. And heading into this week, guys, we have to watch a couple of key levels here on SPY. The most prominent one that I'm looking at here, if I pull up the 4-hour chart and zoom in a little bit, it's going to be roughly $410 per share. And mind you, we did break over 407 last week, which you guys know that was the high from the beginning of March, right? Yeah, right around the 6th of March is where we hit 407. So we momentarily dipped under that last week. We got to about 405, and the fact that we broke back over 407, closed over it, that's a very good sign for the bulls. Now, 410 is going to be the next spot that needs to break. You guys can see here back on the 4th of April, and really the last couple of days, even on Thursday, we failed to break out of $410. Now, if we do break 410, that's where I believe we're going to take a shot towards 412, 413, which was the high from last week. And if that level breaks from there, we're going to be gunning for the highs from February, which you guys know if you've been watching my channel, which if you haven't been watching the channel, hit that subscribe button. Make sure to hit that notification bell as well. 415.16, that was the high from the beginning of February. That's where we could be going next if we take 410 out, if we take out 412.75, which again was the high from last week. So SPY's looking pretty interesting heading into this week, guys. I'd say the bulls are definitely in charge. We're above the moving averages. We have a golden cross here on the 4-hour chart. So kudos to the bulls, guys. They've been doing pretty well on SPY, and they've been doing very well on Triple Q as well. Heading into this week, guys, I'm looking at, you should be watching it as well, $320 on Triple Q, which was the high from the end of August. That's going to be a very big resistance coming up, and we can see right now, if I zoom in a little bit, we're clearly above the 50 and the 180 SMA. We have a golden cross here on the 4-hour chart, and if I zoom in on the 20-day, let me pull the 5-day up, we can see as of last week, which is very good for the bulls. Well, I guess for a moment there, it wasn't good for the bulls when we dumped under 317. We got to about 314 on Wednesday. Then we hit 312 on Thursday, which we took the low out from Wednesday. That was not good for the bulls for a little bit of time there. But we had a crazy run on Thursday. We closed on a huge green note, and we closed above 317. In fact, we closed over 318, which is a very good sign for the bulls. So now let's see if we could fill that gap this week to about 320, 321. Then if that does break 321, 322, that's where I'm actually going to set my alert. That's where we could get the next huge move on Triple Q to the point where it could be going towards 330, 335. That's what I think at least. So I do have an alert here at 310. I think that's a mark is at or below alert. Let me set another one at 320, which I'll put it at as a mark is at or above alert. Let me put it at 322 actually. Mark is at or above 322. That should be a good spot to put it. So again, this week, guys, bank earnings are coming. Earnings season's kicking in, and we also have CPI data, which I did talk a little bit about, I think, on Saturday, or was that on Friday? Either way, we covered it in the past couple of days, but let me quickly run through it again for you guys if you did miss that video, which usually a lot of people do miss the Saturday video. Sunday videos get a little bit more, traction, a little bit more attention, so let me break it down here for all of you guys that missed it. So we have the CPI data month over month. You can see that right here, year over year. We get the core CPI. We have, a bunch of stuff happening next week, a bunch of stuff. We have the Fed minutes on Wednesday. So yeah, Wednesday's jam-packed, guys. In the morning we get, I think at 8:30, right? Yeah, it's always at 8:30. Brain fart, guys. It's always at 8:30 a.m. on the East Coast. So CPI month over month is projected to be 0.2%. Yes, that's come down a good chunk, guys. Previously, it was 0.4% in the last reading. So that's the forecast, 0.2% for this month, right? And the yearly number, the year-over-year number is going to be 5.2%. Well, that's the forecast at least. And previously, it was 6%. So that's actually a big drop, guys. We're talking 0.8%. That's a very big drop if it does come in at 5.2%. Now, granted, that is already priced in to the market. Now, let's say inflation, the CPI number, let's say it comes in at 5.5, 5.8, I don't know, 6%. We'll see. That would end up shocking the market for sure, and maybe that would cause potentially a short-term sell-off in the overall stock market. So realize inflation is coming down, projected. It's projected to come down a lot, but if it does somehow surprise to the upside, keep in mind, we could see a little bit of a shock in the markets, as that's not priced in as of now, or at least I don't think it's priced in as of now. So CPI is going to come down. That's a good sign. That's a sign that the Fed, what they're doing is working, at least as of now. It is working, guys, at least as of now. And of course, we have core CPI, which is projected to be, and mind you, this is the change in the prices of goods and services purchased by consumers, excluding food and energy. That's core, guys. It's excluding food and energy. That's looking to come in at 0.5, or rather 0.4%. Last month, it was roughly 0.5%, so that's going to come down a little bit, which is great. And again, we have the Fed minutes on Wednesday at 2 p.m., which is what I'm really going to be focused on, the meeting minutes. You guys can see right here, the Fed minutes, it's a detailed record of the FOMC's most recent meeting, providing in-depth insights into the economic and financial conditions that influence their vote on where to set interest rates, which of course, everybody wants to have a little bit more insight on that, a little bit more detail, which is what the FOMC meeting minutes is going to give us on Wednesday, 2 p.m. on the East Coast. So yeah, needless to say, guys, buckle up, get ready. This upcoming week is going to be a very big week. And again, we have earnings season kicking off, which is going to be very, very fun to watch. We have big tech coming up later this month, which is great. We have banks coming up right now this week, which we're going to break down right now. And by the way, if you guys have not gotten up to 15 stocks yet for Mumu, what are you waiting for? Use that link down below. Once you open up an account, you get 1 free share of stock. If you deposit at least $100, you get 4 more free shares, totaling 5 stocks. And listen to this, if you deposit at least $1,000 onto the platform, guys, you get another 10 stocks, totaling 15 free stocks. And right now, they're actually doing a promo. They're doing a paper trading competition, and if you come in first place, you're going to get a $1,500 prize, and you're going to get 1 month free of Benzinga Pro. So if you guys want to be a part of that competition and you want to get a bunch of free stocks, use that Mumu link down below. You're not going to regret it. It's a win-win. It helps you out, gives you free money. It also helps out the channel. I appreciate you guys as always. And now let's talk about some stocks. So like I said about 15 times in this video, guys, earnings season is upon us, which is always the most fun time, at least for me, in the stock market. It makes for great content, and it's honestly just a fun time to trade and just keep track of everything going on in the market. So we have JP Morgan, and mind you guys, There's been a lot of, there's been a lot going on with banks. So now we're going to actually see some of the big banks report. We have JP Morgan reporting later in the week. They're looking to do EPS of $3.40. And mind you guys, these are all estimates that we're going to talk about in this video. They're looking to do EPS of $3.40 on revenue of $36.18 billion, which would be up about 14.5%, almost 15%, which is actually not that bad. Not too bad of growth there for JP Morgan projected. And you guys can see their earnings are on Friday the 14th before the market. So we're going to have all week to wait for these bank earnings. And they're probably going to be they're going to be volatile, I think. The bank stocks, they're probably going to be volatile before the earnings and probably heading into the earnings and after the earnings actually come out. And you guys can see JP Morgan stock is down from 144 to about 127 as of now. And it's in other words, it's down about 12%. And it's been consolidating these past couple of days. If I pull up the 10-day, 30-minute, you'll be able to see it's been holding tight around 125, 127 these past couple of days. And the past couple of weeks, it's really held around pretty much that same range, 123 to 125, 127. That's where this has been at, but we are just not getting a breakout yet. We are consolidating, but we're just not getting the confirmation of a pop. And for me to see a legit reversal on JP Morgan, I'm going to need to see a break past at least 130, preferably 132 to about 135. So I'm going to set my alert at 130 for now. Mark is at or above, and we'll watch it. We'll see how it does heading into earnings. Actually, let me set another one here. I have one at 130. Let me put one at 133 as well, and we'll see where it starts to move, if it starts to move, heading into the earnings report. So JP Morgan is definitely the big dog, the top dog to watch out for this week. We also have good old Wells Fargo, whose stock has not been doing well, guys. This thing was at almost $50 a couple of weeks ago, about 2 months ago. Now it's at $37.90. It is down about 22% in the past 2 months. In other words, it is in a bear market. They're looking to do EPS of $1.12 on revenue of $20.11 billion, up 14.3% year over year. Not too bad for Wells Fargo either there on the revenue growth projected, which is right in line there with JP Morgan. And like JP Morgan, guys, their stock chart is a little bit funky right now. It's actually way worse than JP Morgan's, and it does not look like it's showing any signs of a reversal anytime soon. So I'm going to set my alert on this thing at $40. Let me just do that now. Mark is at or above $40. And you can see here, guys, on this 4-hour time frame, $40, if I clear the drawing set, that was support throughout the end of September, heading into December, heading into the new year. So that's now going to be resistance, right? The fact that we fell under it, it became resistance. Now that's going to be a very tough spot to break out of. But if it does, if Wells Fargo does break $40, that's where it could start to maybe, just maybe, break out. And the next stock here is another bank, guys, Citigroup. They're reporting on Friday. Same with Wells Fargo, same with JP Morgan, like I said, and they're going to be in the pre-market. All of these are reporting in the pre-market, and this stock chart, guys, does not look pretty at all. Well, I guess one thing that's positive for the bulls is the fact that we have an inverse head and shoulders here. You guys see that left shoulder, the head, the right shoulder. You guys see that, but we're not really getting any confirmation on a pop here on the right shoulder quite yet, which if we do start breaking, let's say 48 into the 50s, that's where we might start to get a legitimate reversal. We're not there yet, but I will set my alert at $48, and we'll see where it goes from that point if it does break that 180 SMA. And they're looking to do EPS of $1.70 on revenue of over $20 billion, right around $20 billion, which would be up 4.7% year over year. So let's see if this inverse head and shoulders on Citigroup does end up playing out. And the next one is actually not a bank. This is an airline. We have Delta Airlines reporting earnings this week as well, which I forget what day they're on. Let me take a look here, guys. On the chart, it seems like Delta Airlines is on the 13th. So what is that? Is that on Thursday? Yeah, Thursday before the market, they're reporting. So they're looking to do EPS of 33 cents on revenue of a little bit over 12 billion, which would be up 47% year over year. Pretty wild there, guys. Up 47% year over year, and kind of it's kind of looking like Citigroup here in terms of the chart. Just like Citigroup, we have an inverse head and shoulders on Delta Airlines here on the 4-hour chart. You guys see that, right? We have the left shoulder right there. We have the head right here. Then we have the right shoulder. You guys see that. So if we start to pop towards $35 and preferably above $35, that's where we could start to get that reversal, the right shoulder to play out, and that's where we could start pushing to $40 a share. So I'm going to set my alert at, I'm going to put it right by the highs from a couple of days ago, which is where we got rejected at $35. Let me show you guys this. If we take those highs out from a couple of days ago, we take out that 180 SMA, this could really start to take off, in my opinion, towards the well, we're already in the mid 30s, but high 30s, maybe even low 40s. Yeah, that's in the cards, guys, here on Delta Airlines. And the next one is United Health Group, who's also reporting earnings this week. Shocker, like all these companies that we're talking about today, guys. They're looking to do EPS of $6.13 on revenue of $89.76 billion. And actually, the last company we're going to talk about today is not reporting earnings, but I think they're going to break out any minute now, which is why we're going to cover it. So stick on throughout the end of the video, guys. So United Health Group, again, EPS 613 on revenue of about $89 billion, which would be up 12% year over year. Not too bad. And look at the stock, guys. This thing's been reversing for just a couple of days. You know, we started breaking out a couple of days ago from 460 now to $520. It's up 11-12% in the last 10 days. And we have a golden cross. We're above the moving averages. And it looks like earnings are on the 13th, I believe. 14th. They're on Friday before the market open. So we're going to watch out and see how this unfolds. And mind you, it is a little bit overbought heading into earnings. So maybe we cool off a little bit before we start rallying again. But overall, it is reversing, and it's above the moving averages for the first time in months. No joke, for the first time this entire year. No joke, guys. Since the middle of December, we've been trading under the moving averages. So now we're finally starting to reverse. It's worth watching. Ticker symbol UNH. And the next one here is CarMax, which you guys probably know has not been doing well. It's been struggling as the car market has, it's been deflating, and rightfully so. It's been in need of that. It's been in need of that as car prices got in a massive bubble over COVID, and I think there's a little bit more downside in the car market for sure before it levels out or maybe goes up again. I don't think it will go up again like it did during COVID. I don't think that will ever happen again. Who knows? Never say never. But CarMax is reporting earnings this week. They're on, I think they're earlier in the week, maybe Tuesday. Yeah, I think they're on Tuesday before the market. They're looking to do EPS of 24 cents on revenue of $6.04 billion, which would be down 21% year over year. So they are going to be losing a ton. Well, not EPS. They're going to be profitable, but their revenue is going to decline a ton, projected 21% revenue decline. And clearly, guys, we're still on a downtrend on CarMax. Does not look like it's reversing anytime soon. So for that reason, I'm not too excited about it. But if it starts to break out of, let's say, 70 to 75, that's where I might, keyword is might, change my opinion on it. So I'm going to set my alert. Mark is at or above $75 a share, and we'll see if it does end up reversing out of that level. And the last stock, guys, last but not least, is good old Roblox. And by the way, make sure to leave me a comment. Let me know in the comment section if you guys stuck till the end. I appreciate all of you, each and every one of you watching this content, watching my videos. You guys are awesome, guys. I've been at this YouTube thing for quite some time, right? A couple of years at this point, more than a couple of years. And if you guys are still sticking around, you guys are awesome. So Roblox, I've covered this before, but I'm covering it again because I think any minute now we could get a massive pop on it. You guys can see we have an ascending triangle, clear as day, on the 4-hour chart. Let me show you this as I'm butchering everything here. We have a clear resistance at $45, $46, which we're pretty much right at that level right now, and we've been making higher lows into that resistance for a couple of weeks, probably close to 2 months at this point. So any minute now, and mind you guys, $46, that was resistance back in October. That was resistance back in September. Any moment now, I'm thinking we're going to clear past that level. I'm going to set my alert at $47. If we do get that massive leg up past 47, this could be running low mid 50s like that. Trust me, guys, It's possible. It's not guaranteed. No, nothing's guaranteed. Don't listen to anybody that says, oh, this is guaranteed. Oh, this is going to happen on this day, because they're full of BS. But it's possible. That's what I can tell you. So I'm going to set my alert. I did set my alert at $47, and we'll see where it goes from there. And with that being said, guys, that's it. I guess that's it. I'm going to wrap up the video. If you enjoyed it, hit that like button. Make sure to subscribe. And don't forget to get up to 15 stocks from Mumu. It is free money, guys. Linked right down below. Once you open up an account, you get 1 free share of stock. If you deposit at least $100, you get 4 more stocks, totaling 5 free stocks. And listen to this. If you deposit at least $1,000, you get another 10 stocks, totaling 15 free stocks. So if you want some free money, you want to help out the channel, use that Mumu link down below. You might as well get 12 stocks from Webull as well. And feel free to check out my Patreon. If you guys want to be a part of the Patreon portfolio, the Discord chat, if you guys want to see my charts and my thoughts throughout the day, that's on Patreon. That's the best spot to get those, other than the YouTube channel, right? If you want more exclusive access, Patreon's the best spot for that. That's linked down below. And with that being said, I'll catch you guys later.